Hello and welcome to Morningstar. I am Francesco Lavecchia and today I'm joined by Dan Romanoff, equity analyst at Morningstar. He's our expert in software provider industry. So Dan, reading the last quarterly results of many software companies, I've highlighted some common elements I would like to discuss with you in order to have a big picture of what is going on in this industry. So the first thing I've highlighted in your comments is the bad macro environment that is affecting quarterly results. Can you give us more colors about why these macro pressure are impacting so badly the industry, and which are the companies, in your opinion, that are more exposed to these threats?
Sure. So thanks for having me. And on the macro point, I think that the first thing I would say is foreign currency has been as much as a 500 or 600 basis point headwind to revenue growth, and that is really severe. That's the largest headwind I can remember in loosely 20 or 25 years of doing this. So that is a real pressure. That's an artificial constraint on growth that should normalize. Even in the last few months, I would say that is already sort of reverting back to normal, but it's still pretty severe. We see other things going on. We see inflation. That is really tough for both enterprise customers and consumers to get around, so their purchasing power is less. So it just makes everything a little more cautious. It makes the deals slower. We see geopolitical issues going on. The war in Ukraine obviously has been a problem. European demand is a little bit soft in some pockets, so that hasn't been great. And there are other things going on as well. But I think the main one is the FX that I would point to, and just this general sluggishness. Energy costs are up dramatically. That is a big impact for like Microsoft and Amazon specifically. So what happened was you had a surge of demand during COVID, and then this has sort of eased a little bit, and then it makes the pressure seem worse than it is right now. And on top of that, we saw the software stocks go on a tremendous run for most of 2020 and 2021. So the fact that they're sort of unwinding now makes it seem much more painful than it really was.
Okay. Another common aspect is the layoff intensification. Many companies are cutting their workforce, but in your last report, you say the industry will enjoy positive tailwinds for long-term growth. Can you explain why we are saying all these firings, and which are the positive tailwinds you talk about?
Yeah, sure. So in the last 6 months, probably you've seen certainly more than half of my software coverage, at least, have some sort of headcount reduction, some sort of facilities reduction or rationalization. So they're definitely looking to manage their cost structure. On the 10, I think that probably as many as 5 or 6 companies have had sort of 10% headcount reductions. Salesforce, Shopify, RingCentral, Twilio, to name a few. 10% is a pretty big cut to staff. Some other high-profile names, Microsoft and Amazon, were probably more around 5% of staff being pared back. So those are real cuts. They are real cost savings opportunities. And really what happened was demand just spiked during COVID, and the growth was considerably higher than these companies were anticipating. So they had to go on a hiring spree, more customer support, more sales. They beefed up R&D. So they were investing sort of all over the place. And now you see sort of post-COVID, you see like demand unwinding. So it's like it was artificially high, and now it's coming back to normal. And these companies that had hired so aggressively during COVID, they're having to pare back their employee base. So yes, it's painful in the near term, but in the long term, I think software is very attractive. I don't think that this is a real demand-driven problem right now. I think these are short-term macro issues, even if it takes throughout the rest of 2023. I think that what software brings to the table makes it really compelling. So just from a like a moat standpoint, these are very moaty companies. Businesses can't really function without software. And in an environment where cost cuts and like time to value are important, well, software makes productivity higher, and it allows employees to do more with less. So software I think is pretty well positioned. And then just from like a fundamental standpoint, you have generally strong balance sheets with software, low debt balances, high cash balances. They generate a lot of free cash. So that sort of allows them to continue to operate normally throughout a recession, or as close to normally as possible. So that's why I'm bullish on software in the longer term.
Okay, so the last question is about AI. As Microsoft recently announced a $10 billion investment in OpenAI, can you explain what's the plan that Microsoft has for this market, and which are the other companies that are investing the most in AI?
Sure. So this gets, I think, pretty complicated because a lot of companies have been investing in AI for some time. So even across my software coverage, you see like elements of pretty powerful AI being incorporated to do sort of like or to help users with more routine tasks. So and these have been branded. So like Salesforce has Einstein, Adobe has Sensei, Microsoft. Amazon, even Apple has, and I don't cover Apple, but they have Siri to help you with sort of mundane tasks. But as AI becomes more advanced, the capabilities are a lot more powerful. So the products become more compelling, and you could do a lot more with them. So so Microsoft invested reportedly $10 billion. That has not been confirmed by Microsoft. They say multi-billions in OpenAI. And so there is a immediate opportunity to start licensing products on Azure. So there's two things that go on: is OpenAI uses Azure as sort of its base in which to sell from and develop on, and then also Microsoft has licensed some of the early AI models from OpenAI to try and commercialize. So two different things going on there. I think this deal sort of immediately launches Microsoft to be probably the AI leader, if not one of two or three AI leaders. Google, Amazon, I think are pretty obvious candidates there as well. And I think that as users become more comfortable interacting with AI, just in terms of chatbots or using AI to sort of help them program or create a set of instructions to query a database or whatever. I just think as those things become more prevalent and people become more comfortable with them, the use cases will proliferate further, and that I think will be a boon to Microsoft in terms of revenue, if not just software like proliferation and like expansion of use cases. I think it'll be good for Microsoft. Eventually, I think there will be new products that come out. I think that prices can go higher as you incorporate robust AI. So I think that there's a lot to like. I also think that there is a lot of it is unknown, and it kind of depends on how the use cases evolve.
Okay, very good. Thanks a lot for your time. For Morningstar, I'm Francesco Lavecchia. Thanks for watching.